Now we have case scenario number 13, which is on capital gain section 50C, stamp duty value and income from other sources, receipt of immovable property at less than stamp duty value. Mr. Sarthak, aged 37 years, is a share broker and sold building to his friend Mr. Anay, who is a dealer in automobile spare parts. Now, the seller, Mr. Sarthak, is a share broker. For him, buying and selling of property is not his business. That means it is not stock in trade for him, and building will not be stock in trade for Mr. Sarthak. It will be capital asset. Same way for the buyer, Mr. Anay, also, who is a dealer of automobile spare parts, building will not be stock in trade. Building will be capital asset for both of them. It is sold for 120 lakh. Actual sale consideration on 10th November 2022, when the stamp duty value was 150 lakh. Now 150 lakh, according to section 50C, we know pretty well, either sale consideration will be either actual sale consideration, which is 120 lakhs, or stamp duty value. Stamp duty value is 150 lakh. However, stamp duty value can be taken into account only if it exceeds 110% of actual consideration, 120 lakh. The 110% of 120 lakh will be 122 lakhs, 132 lakhs, and 150 is definitely more than 132 lakh. That means 150 lakh can be taken into account. Then sale consideration will be 150 lakh. However, this is a stamp duty value as on 10th November 22. Instead of stamp duty value as on the date of registration, we can take into account stamp duty value as on the date of agreement, if that is lower than 150. However, stamp duty value as on the date of agreement can be taken into account only if some amount was received by Mr. Sarthak from Mr. Anay by way of account payee check, account payee draft, ECS, account payee check, account payee draft, ECS, or through prescribed electronic modes. Let's check. The agreement was, however, entered into on 1st September 2022. This is the date of entering into agreement. As on that day, the stamp duty value was just 140 lakh. Now 140 lakhs can be taken into account instead of 150. 140 can be taken into account only if it exceeds 110% of 120. That means it is more than 132. It is more than 132. And secondly, this 140, some amount was received by way of account pay check, account pay draft, ECS. Mr. Sarthak had received a down payment of 15 lakh rupees by cross check. Now cross check is not fine. Cross check is different than account pay check. Cross check is definitely not fine from Mr. Anay on the date of agreement. Then in that case, 140 lakh cannot be taken into account. We'll have to settle with 150 lakh. So ultimately, as per section 50C, the sale consideration to be taken into account will be higher of these two figures, 150 lakhs. Okay, now this is the paragraph for this particular detail. Second paragraph talks about Mr. Sarthak purchased the building for rupees 95 lakh. Okay, this is also part of the same information. 95 lakh is the purchase price. 150 lakh will be the sale consideration. 10th May 2018, that means financial year 18-19 it was acquired. Okay, further it says Mr. Sarthak also sold an agricultural land. Agricultural land situated in a village which has a population of 5,800. Now agricultural land is not a capital asset according to section 2 clause 14. Therefore, there won't be any capital gain arising on transfer of agricultural land. For rupees 60 lakhs, provided agricultural land is situated in a village, rural agricultural land it should be. What is not considered as a capital asset in the definition of capital asset, if you recollect, there were 6 exceptions. Capital asset, rural agricultural land is not a capital asset, but urban agricultural land is a capital asset. Therefore, they have clarified situated in a village further. So this is not an asset. Mr. Vivek sold to Mr. Vivek on 1st March 2023 current year, which he acquired on 15th June 2015 for 45 lakhs. Stamp duty value of the agricultural land as on 1st March 23 is 65 lakh. This entire paragraph will be ignored. The answer will be no tax, no capital gain, because not a capital asset. Not a capital asset. Further, CII numbers are given. For this particular property, agricultural land, which was acquired on 15 June 2015, financial year 15-16, CII number is 254, but that is not required. 18-19, that means the year in which the building, the first asset given in the question, was sold, 280. This will be required. And financial year 22-23, we know pretty well, 231. So CII number for 18-19 is 280. I'm just writing it down here. Question is over. Based on the facts of the case scenario given above, choose the most appropriate answer. 13.1. What is the amount of tax to be deducted by Mr. Anay, the purchaser of building, and Mr. Vivek, the purchaser of agricultural land? Agricultural land is purchased by Mr. Vivek agricultural land situated in a rural area, and building was acquired by Mr. Anay for 120 lakhs. Now TDS will be what amount of tax is to be deducted? To answer, Vivek will not have to deduct TDS, no TDS. TDS here will be under section 194A, 194IA, provided at the rate of 1%, provided the consideration for purchase and the stamp duty value both exceed 50 lakh. What should be equal to or exceeding 50 lakh? Both. The actual sale consideration or actual consideration as well as stamp duty value. TDS will be on what amount? At the rate of 1%, TDS will be on the higher of the two amount. The actual sale consideration and stamp duty value. Actual and stamp duty value. If any, on consideration paid or payable for transfer of building and agricultural land. For agricultural land, this 194IA is not applicable at the rate of 1% on agricultural land on purchase of rural agricultural land. That is an exception in 194IA. That means 194IA TDS will have to be applied only on building. Rate of TDS is 1%, but 1% of what? 1% of either actual sale consideration or purchase consideration 120 lakh, or the stamp duty value which we are taking into account 150 lakh, whichever is higher. So on 150 lakh. So Mr. Anay 150 lakhs, 150 lakh into 1% will be 1,50,000, 1,50,000 by Anay and nil by Vivek. B seems to be the correct answer. Other answers are wrong. This one says 150 by Anay, that is 1% of 1 crore 50 lakh, and 65,000 by Vivek. This is a wrong answer. Our answer is B. Let's check what's Institute's answer. Institute's answer for 13.1 is B, 1,50,000 by Anay and nil by Vivek. 13.2 now, what amount of capital gain is chargeable to tax in hands of Sarthak in respect of transfer of building? For agricultural land, it's not a capital asset, so there won't be any gain. Full value of sale consideration, let's calculate it out here only. Full value of sale consideration will be 150 lakh. Why 150 lakh? We have already calculated it out. It's a long-term asset, index cost of acquisition. It is given here. It was acquired for 95 lakhs. 95 lakh on 10th May 2018, that is in 1819, CI number is 280, 95 lakhs. So index cost of acquisition will be 95 lakh into 331 divided by 280. How much would that be? This divided by 280 multiplied by 331, rounding it off to 1 crore 12 lakh 30,357. 1 crore 12 lakh 30,357. 1 crore 12 lakh 30,357. This will have to subtract. There is no index cost of improvement. Long term capital gain therefore will be this less 1 crore 50, 37,69,643. 37,69,643. 37,69,643 long term capital gain. A is the answer. I'm not writing it. 37,69,643 A. Let's check what's Institute's answer. Institute's answer is also A, 37,69,643. Now 13.3. Assuming that Mr. Sarthak has other income exceeding basic exemption limit, then what will be the tax liability excluding surcharge and health and education cess? Excluding surcharge and health and education cess, what would be the tax liability on transfer of building and agricultural land? On agricultural land it will be nil, we know pretty well, and on transfer of building we have a long term capital gain of 37,69,643, which is taxable at the flat rate of 20%. Surcharge and health and education cess are not to be added, so capital gain into 0.2, 753,929. 753,929 will be the tax. 753,930, they have rounded it off to. Answer is C, 753,930. What's Institute's answer? Institute's answer for 13.4 is also C, 753,930. Our answer is correct. Now proceeding further with 13.4, what amount of income is chargeable to tax in the hands of Anay, the purchaser of building, in respect of transfer of building? Now Anay is a purchaser, so for him capital gain will not arise, but his income will be governed by income from other sources under section 56 subsection 2 clause 10 subclause B. His income will be 150 lakhs, the stamp duty value, minus the actual purchase consideration 120, 30 lakhs. 150 lakh worth of stamp duty value property he has acquired for 120 lakh. So differential amount 30 lakh will be his income. 30 lakh income from other sources. Institute's answer is also B, 30 lakh. Our answer is correct. With that, this case scenario comes to an end. See you in the next video with case scenario 14.